All right, everyone, warm welcome today to another Fonoa Tax Essentials. We're going to talk today about one thing that we really like, given our backgrounds, is in marketplaces, and that is how to solve marketplace tax challenges. We've highlighted this as marketplace challenges, but it's clearly tax challenges, indirect tax challenges to be more precise, around VAT and GST. Today, for those of you that don't know us, we have myself here, Rob. I'm the Chief Tax Officer at Fonoa. My background, like I mentioned, is in marketplaces. In my case, Uber, where I used to be the head of international tax. And next to me on the slide on the left side and on the screen, left to me as well, I have Eiko, who is our head of tax technology here at Fonoa, used to be the global head of tax technology at Uber as well. Now, above me, and on the right side on the slide, I don't know if everyone sees it the same way, we have David, our solutions engineer. He is our technical guru extraordinary. If we have any questions today on anything technical, he will jump in and immediately provide us with the relevant answer. Right, David? Awesome.
Absolutely.
Cool. So what we want to do today is just to level set expectations a little bit. It's hard to go both wide and deep, and this is a pretty broad topic, I want to say. So we want to level set a bit of the understanding of how we look at marketplaces, some of the common and unique issues that we see surfacing time and time again when we talk to companies in the industry. And then I think we want to mainly focus on how to potentially solve this. And of course, if time permits, show you a little bit of how we solve it together with some of the companies that we have the pleasure working together with. Now, I don't know anything about this platform other than that I'm on it. So Eiko, maybe you can give some household notes on how people can interact, etc.
Yeah, so I know some of you are already familiar how to use this. I saw some emojis floating up on the screen, so clearly one or two people know how to use it already. But if you would like to ask some questions, there is in the bottom right-hand side of your screen an option to either questions or chat. If you hit the chat button, the main difference between these two, if you hit the chat button and you type into chat, that is a message that goes to everybody. So it's quite communal. Anybody can answer those questions as well. Whereas if you use the questions button, it goes directly to myself, Rob, and David, and the moderators, so that only we get to see it. So if you have something a little bit more sensitive you'd like to ask them or non-public, you can go in there versus using the chat functionality. And also, as somebody again once demonstrated, there is also the emoji button. So if you know how
Awesome.
to use
Cool.
that, there you go.
That's helpful.
With a thumbs up, which is also at the bottom of your screen.
Cool. Then I
I
would say
think,
let's jump straight in if that's okay with you, so we don't lose too much time.
yep.
Eiko, maybe you can just highlight how we see marketplaces in the wild. Let's start there.
Okay, at a very basic level, as in connecting buyers and sellers, there are multiple different ways that this can be done. So a lot of the times when Rob, you and I were working together, there was a distinct confusion either from the authorities or from the business exactly what we meant about connecting a buyer and a seller. This is just 6 types of models, and each one of them is a case study on its own, by the way. And then comes back to not being able to dive too deep. But
Yeah.
generally speaking, there are multiple ways that you can structure your businesses to connect buyers and sellers. The models that you have here are publicly available. It's just scattered all over the internet, either in OECD documents referencing them, or in European Commission studies to explain how the gig sharing and digital marketplace economy works. There, the key takeaway for me is not that they're all different, but they have such widely differing implications from an indirect tax perspective
Mm-hmm.
for each of these
And
models,
consequences. Yeah.
and consequences for them. There's an interesting point around, for example, this middle model, which is essentially a platform which has a dual fee structure, charging both the seller and the end consumer a fee for his transactions. Interestingly enough, in some jurisdictions, that's not possible from a regulatory standpoint. You can't be an agent for both sides. As a
Exactly.
result, you have to pick one of the other transactions. What the other thing that to take away from me this is that a lot of the people that are dialed in today are working in platforms and marketplaces that don't operate just one type of model, but several different ones. And this is just a
Yeah.
variety of them.
That's a
If
really good one, by the way, that you tend to see different models either per jurisdiction or per type of service that the same companies offer, which is helpful from a complexity or simplicity perspective.
And it's good to keep this slide in mind for as we go through the presentations, because in a way, a lot of what we're about to say has a direct impact on how this would operate depending on the models that you would have. But generally
Exactly.
speaking, this is just to give you a flavor that there is not one way of doing this. There's multiple different ways, which a lot of you already know.
Yes. So the TLDR is there are many different types of marketplaces, even though they're all marketplaces, but there are luckily for us some common denominators that we see that basically um, lead the charge when it comes to the actual complexity, right? That's involved. And one of them is clearly the fact that you have to be an intermediary. If you're not, then you're not a marketplace, and then a lot of the complexity falls away. What's funny here is that anecdotally, we talk to a lot of companies that think that they're a marketplace, but they're actually not, and they're de facto like a reseller or a merchant. That's interesting, especially when a company thinks that they're a marketplace, but they're not, or certain employees. But that's clearly important. With that, if you are a marketplace and actually have an intermediation function, you of course have to deal with third parties. A lot of the complexity in this model comes from third parties and having to deal with that. So that's crucial and common. And then finally, what we see is that even if marketplaces tend to be very global in nature, especially online, but also in the on the ground services industry, we still see centralization as a key thing within the legal, tax, and finance departments. And that means, just like in the SaaS business model, by the way, that you have to deal with a lot of global complexity as a small team, typically with limited resources. So that's kind of like what I think are the three main things. Now, what can go wrong? That's always the first question that we get asked, like, why is this relevant? How is it important? And what's in it for me? For marketplaces in particular, I think the consequences of getting it wrong are huge compared to any other business model for that matter. And that is simply put because tax is so directly how is that impacting the business, the underlying business, that you can't ignore it. We see basically three areas where this plays out. The business model, like I mentioned, if you get it wrong, you think that you're a merchant, but you're an agent or vice versa in a country or whatever the actual model may be, and you get that wrong, means that you're eating away your margins, or you're doing it wrong, and you're faced with taxes that you haven't accounted for. That's like number one. Number two, I think, is legally the same thing. ACO, we come from a gig economy background, but we see this all
Yep.
over. That nested
Yeah.
employment is, so the agent merchant kind of question is a real big one. If you get that wrong, you end up not being a marketplace where you thought you were one, because these sellers become your employees basically, and that then leads to a lot of unaccounted for taxes, right? And then
And then
finally,
the
I think, and you can talk to this probably, is the user
user
experience side of
experience,
things.
yeah, the UX, and
Yeah,
essentially that here what you're talking about is more of your reputational for your platform. For example, your underlying platform sellers, if you have a B2B model, not getting their invoices out on time,
yeah,
not generating the right documents, not reporting the transactions, causing some headaches and heartaches for your business customers. Again,
yes.
this is specific to kind of a B2B marketplace model where that documentation is paramount for either input tax recovery or other documentations for the businesses.
Yeah. Although we also have seen it in the B2C context,
Yeah.
where travelers may not officially be traveling for business, but still want to expense it, for example, and they just expect that standardized invoice, right? Or standardized experience. And I think standardizing, harmonizing the experience from a user experience perspective for the end customer on the platform is really important. But similarly, I think the seller side, so typically the platform customer, is one that expects a level of service in terms of the user experience that includes taxation, right?
So what were the three things that we had? We have, of course, the legal side. We have
Business model,
the
legal side, so getting the business model
UX.
right, legal side of things, and then user experience, I think, are the most impactful areas,
Okay.
if you agree.
And taking all that into consideration, this is what typically tax teams would look like. So kind of a cover
Yes.
image from a book called The Road to Libya. Uh, not unfortunately, not unlike the Meteor, not mid-journey generated. So this one is
A lot of responsibilities, little
yep,
resources. That's basically the analogy, I guess, right?
exactly. And so what about taking a closer look into the unique and shared challenges that marketplaces? Rob, shall we go into that?
Yeah, let's do it. I mean, and this is important, right? To distinguish like what's unique to a marketplace versus what's broader, applicable to the digital economy, I guess. For marketplaces specifically, if we can go to the next one, there are a couple of things that I think are worthwhile highlighting. This this is funny. Governments typically tend to ask this question, like who's responsible, and then you see other parties pointing fingers sometimes to each other. But in all seriousness, I think it like we already mentioned, it comes from the ecosystem, right? You need to know what your sellers and buyers that are on the platform are from a tax perspective, like as in, are they tax registered or not? Is B2B, C2C? What are we talking about really? That's crucial because you are typically the one that's taking care and handling and intermediating the transaction in real time. That comes with some third-party obligations that we will talk about. And I think, of course, data sharing is a new one that's popping up as well. If you look at it into more detail, like what are the actual steps, or what's like really problematic? Maybe Eiko, you can take this one.
Yeah, I can do this. So number one, it's very, very quickly, is number one, identifying the types of parties from a tax lens that you're dealing with. Is it B2B or is it B2C? Is it a business or a consumer? Making sure that that aligns with legislation in the country to identify them as such. So in some jurisdictions, you need simply a VAT number. That's exactly what you require. In others, it's a more in-depth analysis between a business and a consumer, and depending on the types of activities and nature of the activities, how long they take place, etc., to determine if there's somebody's a business or a consumer. That's typically kind of a step one. Then we call here number two is applying the right tax rates. In reality, it's let me broaden that. It's not just tax rates. It's not applying the tax rates. It's also applying, in many cases, the right place of supply rules from an indirect tax perspective, and respecting the obligation who should charge tax, where, when, and how to remit it back to the authorities. Steps 3 and 4 really merging in the future. This is step number 3 is producing the right documents. Most of us know these are invoices, credit notes, pro formas, whatever that might be. But in reality, a lot of this moving into the digital space now with real-time reporting and e-invoicing, digital invoicing, or submitting structured files in a structured format to the authorities to report that an activity has taken place of some sort. That now it might be that a transaction has happened. In other cases, it might be that goods have moved from one warehouse to another. So depending on the country that you're in, there are these type of obligations as well, which is fascinating when it comes to the marketplace model, because you're no longer only looking after your own obligations, but you're now trying to help your underlying sellers and platform sellers to comply with their obligations in this space as well, which is incredibly difficult. The last two I'll also take together is essentially filing and submitting returns. There's something which is very common to all businesses, which is submitting of VAT filings, but also on top of that, marketplaces are now faced with the data sharing obligations. Of course, DAC 7 within the European Union, but not only, because there's also data sharing obligations now announced and coming into force, generally coming into force, Canada, Australia, New Zealand, Turkey, UK. And this is for businesses that have not been familiar. I know that there's people on the call who are working either in a rideshare or accommodation space where these obligations have been already in place for quite some years, albeit on either a bilateral basis or a multilateral agreement within those platforms and those jurisdictions. But that's kind of the six steps there.
And by the way, maybe this is an interesting one. Just to very quickly share, it is anecdotal and not at all kind of like structured, but you would argue in many cases, like, look, a lot of these issues are on the platform seller, so the marketplace seller, and not so much the marketplace itself. What we hear and have seen ourselves as well is that in practice, tax authorities tend to look at your data. They see what you know. They see that that certain, let's say, platform sellers may breach certain registration thresholds here and there, and they just say, well, you should know that they have to register. And by virtue of not doing anything about it, you're not very hygienic, and we're going to keep you, we're going to hold you accountable for it, right? And I think it's the thinking of like, look, we are a distinct marketplace, and what happens on the marketplace is not per se our issue, legally speaking, is changing a lot. Practically speaking, is completely different, right? As in, it's already no longer a thing to point to someone else, like you saw on the other slide. Marketplaces are being held accountable and responsible. Data sharing is just one of the examples. I think towards the future, e-invoicing will be the next role for marketplaces to deal with.
Well, we can bet on that, Rob. I was going to say more along the lines of withholding obligations, which are already in existence in some jurisdictions, but not yet widely applied.
Yeah, I agree. That too. But I think e-invoicing is something that we see being rolled out so aggressively, broadly, right, across the globe, that is going to be the next one, especially with things like Vida and cross-border. It's just going to be a thing. And then, I mean, what if you have, let's say, a content creator from Brazil that's selling basically globally on a marketplace? No one is going to go after that single individual seller, but going after the marketplace makes a lot more sense, right? And thus also then basically de facto requiring the marketplace to facilitate these kind of transactional reporting streams. Anyway, sorry, there was a bit of a intermezzo.
Okay, and what we're saying that those some of the challenges, right, which are unique to the marketplace. So the ones that you mentioned before are not the only ones.
No, not at all. I think there's many more that we just can't touch upon here right now. The reason why we mentioned those because they're very transactional in nature, and everyone has to deal with them. Some of the things that you see here are almost worthwhile their own webinar, I would say. Impact of
Hmm.
different business models that you saw right on the second slide in terms of the different types of models have a huge impact, like you already mentioned. I think promotions, discounts, aggregation of those things, trying to figure out how you can somehow positively influence the marketplace dynamics when there's no effective equilibrium between supply and demand is something that the business always likes to do. From a tax perspective, a little bit harder if there are certain contractual relationships in place. As in, you can't discount below zero and etc. Right? So you have to figure that out. And that comes then with a lot of complexity tax-wise, not only the actual factual treatment, but of course also the system setup. Direct versus indirect tax, not going to go into it, but there's quite some opposites there. Language issues, Eco, we discussed, there's not much more to add there. It's just everything needs to be localized, hard. Deemed supplier rules clearly are obviously there. And then withholding taxes, like you mentioned, right? We see this in LATAM a lot, but elsewhere as well, where depending on the tax status of the underlying seller, for example, withholding needs to take place. Or sometimes PSPs, like payment service providers that jump in the mix and make it harder.
I was going to say that again, judging by some of the folks that are on the call, I know there's at least two of you that will recognize the promotions, discounts, and offsetting, how that affects the different business models that we look through, that the headaches that creates in how do you implement this through your systems to make sure that this goes through smoothly and doesn't disrupt, because quite often you
Party
have your systems.
configuration, exactly, yeah.
Exactly, that configuration is really, really complex and requires quite a little bit of knowledge and and I was going to
as
say
well, right?
trial and error. There's
Yeah, it's just, and it becomes harder and harder because the more flexibility that you give yourself to make sure that the marketplace works from a business perspective, so from a demand and supply, the more complexity you create, not only for yourself systems wise in terms of the invoicing, the calculations, etc., but also, of course, to explain it to the underlying seller, who oftentimes end up a little bit confused by all of this financial wizardry, even though it makes perfect sense.
Yeah.
So I think that's one that you end up having a lot of complexity in as well.
Yeah, absolutely. And what I was going to just to finish off on this, as you rightly pointed out, each one of those areas is a webinar on its own. That frankly, if you get us to talk about the business models and combine with the promotions and discounts, that's 45 minutes as we go the different implications of which models are more efficient from an indirect tax standpoint when it comes to promotions, discounts, and offsetting, but at the same time, which are incredibly difficult to implement through systems simply because the way the calculations would have to work. And Rob combined that with digital reporting and e-invoicing, where the rounding plays an interesting and an interesting role, crucial role about your transactions being accepted and reported. It becomes very, very complicated. But as I say, that is a dedicated topic on its own that we could, if it was an interest to people on the call, we could have gone into as well in the future.
Yeah. Let's move on. Yeah, you're right.
Yeah.
By the way, in general, if anyone has anything specific that they want to talk about now or separately, just please do reach out. Like we mentioned, you have the unique challenges, then we have the common challenges in the digital economy. We just did this webinar on the SaaS business model, very similar to this one, but then SaaS. We touched upon broader trends there and issues, so that potato applies to marketplaces, online marketplaces, of course. So I would recommend people watching that one, so we don't have to repeat it here. Let's move on to the actual solutions. How do you find your way out of this complexity, this beautiful complexity that the marketplace model brings with it? I think this is where we both have a bit of a different opinion, but things get interesting, right? Because you start off typically, if we go to the next slide, with yourself and your fellow brave tax men and women internally having to deal with these things. But then at some point you end up with the limitations of just not having enough time, right? It's a lot of manual work. And even though you're already hired, so the costs are fixed in that sense, and probably on the lower side versus some alternatives, there are some limitations there, especially when the volume gets higher and the problems become real time, like for example, tax calculations. You just have to move to a different solution. Initially, we see on a lot of these problems that we mentioned that outsourcing it to professional service providers makes a lot of sense. They have a lot more capacity, resources-wise, so you can get a lot more help there. The downside, of course, is that the costs typically tend to linearly grow because it's an hourly model, and their hourly rate is also typically a little bit higher than your internal teams, logically. So then you end up at some point with making the decision, okay, I'm going to automate certain aspects, and I'm going to use external providers or my own internal team for non automated aspects of the business. I
Rob, can
think
I
on the
challenge you?
automation side, yeah, go
Can
on.
I challenge you just very, very
Please
quickly?
do.
This is a
Please
general.
do.
I mean, it's a generalization, right? That we're saying this. We're not saying
100%.
that this is always the case. There are definitely very efficient ways where professional services can even be less than you doing it in house. I think when you have the right expertise there. But
Yeah, of
generally
course.
speaking, I think we're generalizing, right?
Well,
Or
I mean, I think the generalization here is not. It's just like the type of problem that you're faced with, right? If it's specific, um, not something that repeats itself often. For example, advice on a certain complexity, you definitely wanna probably outsource it because you don't have the expertise in house, right? If you do have the expertise in house and it's not something that repeats itself, then why not do it yourself? It's probably
yeah,
easier. I think it's literally if it becomes like high volume repetition, right? So something that you could automate and that probably pays off. That's when you move towards the left and say, well, now what, right? How can we automate this problem way so that we have time for doing other things
I think
on a
I've
day?
just realized this is another webinar topic on its own as well, because we could go
Yeah, and I
further. But
think I think what's also probably worthwhile mentioning to the folks online, I think some of you have a really good framework for making this distinction and the decision we see in practice because they're telling us about it. Others not so much, and they just do whatever feels natural. I think having a good framework for this, saying, well, hey, what makes sense in this situation, is not a luxury. It's just something that's really helpful to have. But anyway, on the automation side, you have two options, of course. Basically, you have build versus buy. You can either build it yourself in house or buy an existing solution. Let me start with build. Build is almost like the epiphany of something really magical because you make it yourself, you craft something that works really well for you, and oftentimes is something that's so close to what you need because you can really dictate what it needs to be. So it's closest to your needs, probably, right? The downside is that, first of all, you have to have the resources or get them allocated. A lot of companies that we talk to and tech teams struggle with this enormously. They can't get enough resources. And if they can, it's so limited that it takes forever to actually build something. So that's the downside, speed. I think on top of that, the costs, as we have shown here, are huge. Why? Well, again, you can't get the resources. If you can, it's going to cost you somewhere else in the business, the opportunity cost. It's oftentimes more useful to have engineers work on business features than on tax compliance, for example. But on top of that, is not a one-off, right? People tend to think about building something as like, hey, you do it, you're done. The business evolves and it becomes like rebuilding the same thing over and over, and the maintenance costs are just huge. Versus, of course, not building your own power plant and finding something externally that may not be the exact fit for you, but has a lot of the boxes checked. And in those cases, it's better to go, I would argue at least, with external tax technology that does the trick for you. And this is especially the case if it's for use cases that are common, right? That are not solely specific to you, which of course often is the case, but either affect an industry or a specific use case that others suffer from as well. Economy of scale principle, basically. Does that make sense, Eiko, or do you still disagree?
Right, you and I can debate this. See, I posted in the chat. I think I was always biased. I have my own personal view in favor of build
I
because I
love
always
a
find it
building.
interesting. I know, and I know that there's at least one person in the call that will agree with me there. But we're not going to get into this. I lost my debate, and I already lost
Well,
on one of these webinars. I lost a bottle of
let's put it this
champagne
way.
to Rob. I'm not
Maybe as
going
a
to do it again.
conclusion, whatever your belief is, right? What the best
Mhm.
solution would be, what I see in all of my conversations with large companies and smaller tech teams is that the business reality is that you don't get the resources, right? You just don't
Yep.
have the internal resources to build whatever you want. And as long as that's the
Yep.
case, you're not gonna choose that option every time anyway.
Yeah. Rob, just again, conscious of time. I think we also
Yeah.
have um, a couple more slides to go through, but I do want to say that we will be able to try and show something towards the end. Maybe it's worthwhile calling out now. I don't know if Tiago, you can post a poll. A good time to just post a poll in the chat.
What we want
And
to
I have
show. Yeah.
yeah, what you want to see, because again, we're time limited. We don't want to waste anybody else's time, and we do want to show what's relevant. If you can
Let's
go
speed
to
it
the
up.
polls,
You're right.
yeah, and let us know what you would rather, what David would like to see, what you would like to see David show. Then we can do that towards the end as well. But tax technology, again, there's two types of tax tech. There's the necessary stuff. We can coin it as necessity tech, things that you simply can't do without. In this space, think digital reporting requirements or e-invoicing, specifically in countries like Taiwan, where if you don't comply, you just don't have access to the market or you get kicked out, banned or blocked. So you really have to implement that. This really isn't much of a choice anymore as
Yeah.
governments implement digital requirements upon companies. So that's one form. And then there's the other type, which is where what you would do to achieve one of three goals, or hopefully if you can get all three, that'll be even better. Number one is making things a lot faster than you're currently doing it. So taking manual repetitive tasks, automating them, and getting them to be done faster. So you're saving on time and resources. So speed. The second one would be probably accuracy. You're trying to remove manual errors from your processes, automating it and making it more accurate. Or, for example, deploying a solution that is just technically more accurate, able to do the calculations that you would need in order for your business to run effectively and accurately. So number two is accuracy. And the third one, often forgotten about, but equally important in my view, is job satisfaction. So you've hired a lot of really smart people that are using your technology, and it's not unknown. In fact, it's surprisingly common to hear that people are switching their positions simply because they don't like the technology that is being used. And that often comes with one additional criterion. You have to be aware of a better solution. So if there's if you're not aware of anything better out there, you really just you suffer it. It is what it is. But as soon as you become aware there's better ways and faster ways and more satisfying ways to do your job, then we have seen people switch out of companies for that reason alone. So that's interesting. That's at a high level. That's the requirements from a tax tech point of view, Rob.
Yeah, makes sense. Let's move on.
Yep. And
what do we do very quickly? How do we help?
How do we help? So we're going to go through these six things. Number one, all of you know, I think on the call, certainly most of you know, we have a tax number validation solution, tax ID validation solution, so which helps you determine B2B and B2C, or distinguish between B2B and B2C transactions. There's also a tax engine that we have deployed, again, focusing on services and also available both United States and international markets. We also have an invoicing and an e-invoicing solution, which is again helping you to report not only your own transactions but specific to platforms and marketplaces. Really helpful because we report on behalf of the underlying supplier, which is a little bit more unusual and nuanced. Again, that is a webinar on its own as to how that happens across different regions and what are the challenges of doing that across different countries. Then the last ones is usually to do with the reporting. Of course, we have a VAT return, simplified VAT return solution, which is now extending into standard returns, but also something that is currently in the works is the data sharing obligations filings, both for DAX 7 as well as other jurisdictions in the space. So
maybe to just recap what you're saying and bring it back to the topic. If you're a marketplace and you need tax technology that solves the marketplace specific issues like third-party billing, so invoicing on behalf, self-billing, but of course also like validating whether your buyers and sellers are businesses or not, so you can determine what the tax consequences are. We have those rules set up, and this is almost like an off-the-shelf solution for that, including e-invoicing and including ultimately the data sharing point as well. Right? That's what you're saying.
Yeah, exactly that. So, and awesome. I don't know if everybody has managed to vote in the poll at the bottom. I see that we've got. Let me just have a look at the results. 67% in favor of the e-invoicing. David, are you okay to showcase that to us in a little bit?
Yeah, it's getting close to 50-50 now.
Oh, it's getting okay.
So, let's give it one more minute. Who we are, just kind of like to do our elevator pitch as well. We are a group of basically people coming from marketplaces in the sense of the type of business backgrounds that we have. And in two domains, tax and technology, we brought that together and we started fixing things that we saw were not working for marketplaces specifically initially. By now, we do a lot more for a lot of different industries, but that's where we come from, and that's why this topic is so close to our heart as well. And that's why we think that we have some idea of what's going on inside marketplaces these days. And that's also why we are luckily in a position to help a lot of the larger household marketplaces in the world. We have the privilege of working with these companies that trust us with their complexity, and we try to help them wherever we can across different industries and different models.
Yep. And now.
What is the
okay? So we're fairly close. So e-invoicing won, but not by a lot. So I would try to focus on e-invoicing, but also like go over a bit of lookup. I think we have how much time do we have? Like 15 minutes, a bit less.
Well, I want to ask David, if you have 10 minutes more, why don't we do this? Do them both. Start with the one that got the highest score. Do the one after straight away. People can drop off. It's a recording anyway. They can always look it back, right? If they have time, right?
Yeah.
If that's okay with you.
yeah, let's start with e-invoicing then.